This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachordes. Thanks for joining us at XM.com. The Reserve Bank of New Zealand took its first step to exit the pandemic-era stimulus on Wednesday, projecting a rate hike by September 2022 and an end to its large-scale asset purchase program. Although the bank maintained caution that it would require considerable time and patience to meet its inflation and employment objectives, Governor Orr did not push back on the idea of using the projected rate path as guidance. The yield on New Zealand's 10-year government bonds shot up more than 10 basis points to 1.90% after the announcement, catapulting the Kiwi above its recent trading ceiling to a 3-month high. The European Central Bank seems to be toning down expectations of a taper move at its June 10th policy meeting, with a number of policymakers signaling in recent days that it's too soon to start reducing the pace of asset purchases. Euro area yields were soaring until last week before President Christine Lagarde put a damper on the rally with some dovish comments. However, although the euro's rally also appears to have lost some steam today, the single currency remains buoyed against the US dollar, as the sudden upturn in the Eurozone's economic outlook hasn't been fully priced in yet. The US dollar was attempting to pare some losses on Wednesday after finding some support from firmer Treasury yields. US yields edged up marginally on speculation that the Federal Reserve will decide at one of its upcoming meetings whether to start tapering. Nevertheless, Fed Vice Chair Richard Clarida's confirmation that a taper discussion is on the cards didn't spark any alarm, partly because yesterday's data releases out of the United States provided more evidence that the American economy is not quite roaring as previously thought. The dollar index was last up about 0.15%, barely recovering from yesterday's 4.5-month lows. The dollar's sluggish rebound gave investors the green light to pour into gold, as Tuesday's data only reinforced the narrative that the Fed will sit back and let the inflation story unfold. In the meantime, the persisting inflation jitters, along with subdued U.S. yields, as well as some rotation out of cryptocurrencies, have all accelerated gold's rebound during May. The precious metal broke above the $1,900 per ounce level today, hitting the highest since early January. This was today's Daily Market Comment. Thanks for joining us at XM.com.